we're getting rate cuts, 25 bips, obviously a couple days ago, but then another 25 basis point cuts are being forecasted for the rest of the year. So that is with inflation at 3%. No matter how you slice it, inflation is basically 3. And equities at all-time highs, home prices at all-time highs, gold is ripping like up another almost 2% today alone. Um, yeah, like I think the gold market is kind of indicating what's going on here, which is, anything denominated in dollars is going to be going up in price. So, that includes equities. Now, Bitcoin's kind of lagged. Generally speaking, I would think Bitcoin would be doing better than it's been doing. It's been underperforming gold by about 20% year to date. So that's a little bit surprising, but yeah, generally it's still up. What it's 100 something percent since we started doing the spaces. Like, what was that, like 18 months ago? Still doubled.
Dude, it was a long time.
So yeah, I'm still pretty bullish Bitcoin. I think today was just like, typical kind of like leverage rents sort of thing. It's still sitting at 112,000. When we were doing those spaces in 2024, it was like 55, 56, 57.
It still
So
felt
yeah.
affordable.
Yeah. Now it's like up there above 100, and it's. I remember like 100 was like seen as like a big critical level that, oh no, are we going to be able to hold? We're holding 100 for like months now. You know what I mean? So going all the way back to May. So yeah, I think Bitcoin's doing fine. Like if you look on a longer term time frame,
do you want to share screen actually, Robert?
Yeah, it's underperforming gold, which I kind of don't like. I wish it was relative to gold. I mainly look at Bitcoin relative to gold and relative to NASDAQ. So yeah, some degree of consolidation here, just Bitcoin outright and then Bitcoin NQ. Basically, like year to date, Bitcoin and NASDAQ are perfectly flat compared to each other. Bitcoin Gold, I don't really like this chart as much. It does look kind of a little bearish to me, but yeah, but gold's had like a generational run, I would argue, over the past couple of years, really going back to 2024. I mean, it's just parabolic. Like this is, I think gold is the single biggest story kind of in the markets right now, and then what it's indicating. So this, of course, the gold price is gold denominated in dollars. This is what the dollar denominated in gold looks like. And this is very similar to what you see. You see a skyrocketing gold price in Turkey. You see it in Argentina. Arguably, it's more pronounced, but we'll do the Turkish lira just so people see what I'm talking about. You get this when the underlying unit of account is failing. And so yeah, I think not enough like of the CNBC types, not enough of the kind of traditional boomer types that have participated in markets for a long time. I don't think they really get what's going on. And it's a massive warning sign that gold has basically doubled in 2 years. Because again, the other way to think about that is this is the dollar denominated in gold terms. And so, yeah, it's looking ahead. Clearly we know, any American knows that the dollar's already lost a significant amount of its purchasing power, whether it be groceries or car insurance or health insurance or any of those kind of expenses. Like you already feel like it's lost a lot of purchasing power. But gold being kind of looking ahead into the future, should be a concerning sign for policymakers. But Stephen Myron was out today with some Fed speak. It's kind of crazy when when we first started doing those spaces, I was talking about Stephen Myron as this like kind of conspiracy theorist guy that like wrote this paper on how to kill the dollar, how to weaken the dollar, and how to restructure global trade. And he wrote this paper, and man, I think they're going to do the Mar-a-Lago Accord. This guy, Stephen Meyer, now he's on the Fed. Like it's kind of a trip to say it. But Fed board member Stephen Myron was out today talking about how the neutral rate is, I think, down at 2%, he said. So yeah, like there's going to be a lot more cuts. Like this 25
Wow.
basis point cut was kind of crazy, but
What's your thesis, Robert? What is your real thesis of what's your like your sneaking suspicion thesis
oh
that
well,
you're like,
yeah, no, it's fiscal dominance. Trump say I'm pretty vocal out against speaking out against irresponsible monetary policy when it's going to cause inflation, especially because or asset inflation and kind of a worsening of the K-shaped economy, worsening of the wealth divide.
mhm,
And I've been pointing out, look, inflation's at 3% for months
yeah,
now, because I kind of saw this coming. But like at the end of the day, they're going to do what they need to do to keep the debt service manageable. Interest outlays right now are like 23% of tax revenue. So think about that. For every dollar you pay in taxes, a quarter of it, 25 cents almost of every dollar that you pay in tax goes just to interest. It's not
wow,
paying down any principal, right? Like at least with a credit card, when you make your payment, at least with a credit card, like some amount of that is like paying down the actual
yeah,
principal. But with this, it just interest is about a quarter of all tax revenue. So yeah, they need to get that down, and the way you get that down is by cutting the short term rate. And it comes at the expense of a weaker dollar, most likely. I didn't see what the DXY was doing today, but comes at the expense most likely of a weaker dollar relative to other currencies. It's going to come at the expense of higher inflation. So yeah, the first day of the week does not look. I don't know. I think the DXY is probably going to break this long term support
oof,
that everyone's talking about that goes back to
jeez.
2007. 2008. I think it's probably going to break that. I mean, like the
Well, we could
quarterly
see it
chart.
looks like it dipped below it previously, and it wakes back up,
Yeah,
of course.
briefly.
But
Yeah,
yeah, so
here in
would you be looking? Would you be okay if it was to dip below that trend line, and see that kind of
um
action, or would you be pretty unimpressed no matter what if it starts to break that?
no, I mean, I think it's possible that we get a rally. I mean, I keep the TGA rebuild's basically done. Like that was really the bullish indicator for Dixie. The fact
Mm,
that it couldn't even really rally with the TGA rebuild, withdrawing what was it, like $450 billion of dollar liquidity. The fact it couldn't even rally with that TGA rebuild, I think was pretty notable. And if you like this quarterly chart just looks horrible. Like this
mm,
candle is like super ugly.
yeah, it is.
And it just can't really catch a bid. I mean, it's totally possible that it bounces. This is very long-term support here. But the administration at the end of the day wants a weaker dollar on a purchasing power parity basis. Like the dollar is in 2023 with the Dixie at 105 back here. At 105, the dollar was more overvalued than it was here in 1985 at the height of the DXY when it was 160. Down here at 105, it's more overvalued than it was here with the DXY at 160. So, they need a weaker dollar. Everyone kind of needs a weaker dollar. The trade deficit, the current account deficit is becoming kind of a national security concern. I would argue it has been one, but yeah, the only way to try to reduce that current account deficit is to at least reshore some industry, whether it's automated, whether jobs come back, that's a different story. But at least from a national security perspective, you have to get the trade deficit. You have to do something to address it. And the problem is tariffs alone were never going to do that. Stephen Myron knew that.
Mm,
He's now on the Fed. He knew that you would need a weaker dollar, a fairly valued dollar, right? When I talk about a weaker dollar, I'm not talking about like below fair value. I'm not talking about, it should be at 80 and we're talking about, it's down at 60.
mhm.
I'm talking like we're at 97 and it should be at 30. So
Got it.
30 or
Got it.
35. That's depending on the metric you use, whether it's purchasing power parity or balance of payment. Like there's a number of ways of thinking about it, but uh it's still grossly overvalued. And so you're going to be stuck with this kind of uh, uncompetitive goods and services on the world stage. It's going to lead to a higher trade deficit. That higher trade deficit blows out your current account. That higher current account leads to equal amount of capital inflows via the capital and financial account, so foreign direct investment, portfolio investment, that sort of thing. And that is what has been keeping equity valuations kind of at nosebleed levels. That has
Mhm.
helped put a bid under home prices. So that has helped kind of create this unaffordable housing situation. It's led to the wealth inequality that we see. I mean, the net worth of the top 1% as a share of GDP is basically like a perfect fit with the current account. So
Wow.
the inverted current account, which here we'll do this. So here we're looking at the degree to which the net worth of the top 1% has outperformed GDP. Obviously, the net worth in nominal terms up and
Right.
to the right. This chart is showing the degree to which it is outpacing GDP, overall US GDP. So back here in 1989, the net worth of the top 1%, you add it all together, is about 83% of American GDP. Now it's 171%. So you have had the net worth of the top 1% grow twice as fast as American GDP. And then, yeah, when you overlay the current account, it's basically a perfect fit, the inverted current
Mm.
account. And so, because remember, when you run a large trade deficit, the other way of thinking about that is that a huge amount of capital must flow into your capital and financial account because on a balance of payments basis, that must always net out to zero. And so, yeah, you have this situation where, if the reason the people in the top 1% are in the top 1% is because they own all the assets, right? We know
Yep.
that like equity exposure, the top 10% own 93% of US stocks. So they're in the top 1% because they own all the assets. Well, what does a very large trade deficit, very large current account deficit mean? It means that $450 billion per month, or excuse me, per quarter, it's about 150 billion per month, must flow back in, right? So we ship the dollars to China, they buy Nvidia at a 48 price to earnings ratio. They buy our housing, single family homes, commercial real estate, whatever it is. They buy our US treasuries, they buy our corporate bonds. And so that is how the balance of payments, you can think of it as kind of a mirror image. So this is because the top 1% have all the assets, and then you have this ever larger trade deficit kind of requiring this ever larger amount of capital to come back into our financial markets. You basically have like guaranteed, you basically to some degree guaranteed put a put under their wealth, under their assets. And it's the case with real estate, it's the case with stocks. This is part of the reason price to earnings ratios and all that are so high. Yeah, and housing as well. I did the math. You can actually break it down, and foreign direct investment is where real estate purchases get recorded. Once you include mortgage-backed securities and kind of the derivative side of housing, REITs, right, like real estate investment trusts.
Mhm.
Once you include all that, the total capital flows into the kind of real estate sector, it equates to about 1 million single family homes over the past decade or so that foreigners have purchased. So yeah, it's part of what is making housing so unaffordable.
Yeah.
It's part of what is putting equities
Jeez.
at these record valuations. But look, if you're in the top 1%, it's great because
Yeah,
you
you're
just
cooking.
guaranteed. Yeah, you just
Well,
guaranteed.
you know what's also crazy is that if you're in the 1%, your advice is like skewed too, because you're like you have there's practical advice you can give, but it is short term true. But like for example, you see all these guys in real estate, they all own the homes. They're the 1%.
Yeah,
Graham Stephan comes to mind. He can't, in good faith, say real estate's a good investment, even though he's a real estate investor. And it's weird because he'll be like, "Hey, listen, like you should be renting," and all the comments are like, "Oh, of course you'd say that," but at the same time, it's like, yeah, like of course he would say that, but at the same time, he's also kind of right. Also, it's a weird predicament where we're in a scenario where the top 1% win in such a ridiculously skewed way. It's so disproportionate. What do you
yeah,
see? Is there anything in the midterm that can reverse these things? What would be nice to see?
yeah. Weaker
And
dollar,
yeah, but
weaker
what does that
dollar.
look like as it happens? What does that look like for us, like stage by stage? Can you walk us through what that would feel like for us?
Yeah, I mean, that Alibaba thing that costs like $8.99. it goes to $15, right? So
Oh,
all of the stuff that we rely on other countries for, which is basically everything now,
I
because we've
know.
hollowed out our
Yeah.
industrial base so much, all of those things would get more expensive.
Right.
But yeah, I mean, it's basically a direct fit. Really, the only divergence here is QE2, or was that QE3? I think that, yeah, this was QE3. And
Mhm.
we can see that that benefited the top 1%. QE, right, and monetary stimulus clearly benefits them. And you see the same thing, by the way, if you look at like mortgages held by the Fed and QE versus QT for the affordability of housing, which is
Mhm.
also a direct fit um, to the trade deficit. So it's really like, I mean, it's a lot of things.
Yeah.
A lot of problems can be tied back to the trade deficit. So you get a weaker dollar. Yeah, here's when the Fed was buying a bunch of mortgages, and of course that got worse. But then QT, they started selling those mortgages, and it ended up coming back down to what the current account would indicate it should have been. So yeah, you know, a weaker dollar, you get more expensive imports, but eventually you don't have a current account that deficit of 450 billion, right? Maybe it's only 300 billion
Mm.
per quarter. Maybe it's only 250 billion per quarter. We're actually making things here. The country
Yeah.
becomes not productive right away. It would take many years to become actually productive and run balanced current account. But because of course we also have a massive fiscal deficit.
Mhm.
But eventually you would have more production going on in America. America would be producing more value than it is consuming, or it would, to a lesser degree, right? We would still be consuming more than we're producing. It would just be not as crazy, not as
Mhm.
much to the degree that it is now. And so, yeah, you know, generally speaking, over a decade, imports would be more expensive, but we would also be producing more value for the world. And yeah, like you know, if you're in the top 1%, you like to travel to Greece and go on your Mayorkas or wherever rich people go, that gets more expensive.
Yeah.
So yeah, you know, the average American, that's 67% of them are living paycheck to paycheck. I don't think they're worried about the Mayorkas airfare
Mm.
travel cost, you know.
Yeah. I don't know if they
So
are.
yeah, I think I think that, you know, that's ultimately their goal. So kind of going back to the DXY, like you know, once you realize that they want a weaker dollar, they need a weaker dollar. We need a weaker dollar from a national security perspective.
It's crazy, dude.
95% net international investment position, negative 95% is a national security crisis because we've lost sovereignty at that point.
Mhm.
The global capital can, you know, sell $20 billion of US treasuries, sell 30 billion of some stocks, and boom, like our president's forced to capitulate and reverse his core policy of tariffs. So
Mm.
yeah, I think that I think they need a weaker dollar. I think they want a weaker dollar. They've written it now. Stephen Myron wrote a paper on a weaker dollar, how to get it. So I think that, yeah, eventually, I mean, we're only what, 6 months, 7 months into 8 months into the administration. So
It's wild
I think that that's
to
kind
think
of the
about.
general trend is probably a weaker dollar. You know, you can get rallies in there, of course, like on a short to medium term basis, but I think medium to long term, we need a weaker dollar. They want a weaker dollar. And things like what they're talking about, the negative real rates, cutting the federal funds rate by 300 basis points, like Trump is talking about, issuing even more debt in short-term treasury bills. Those sorts of things are very inflationary. They're very stimulatory, and we're going to have higher inflation. But it's kind of, you know, it is what it is. It's going to cause a weaker dollar, and eventually you'll get into a situation where that weaker dollar means the euro and the yen and what, you know, these other currencies are going to start to get too strong. You
Mm.
know, we're the America is the only country that's dumb
Wow.
enough to actually want an overvalued currency. No one
Mm.
else wants a strong currency. Europe doesn't want
No.
one. The Swiss with the franc, they have already actively intervened. Their currency was getting too strong over the past couple months, so they already intervened to weaken their currency on purpose. Of course, China has been weakening their currency for, I don't know, 2 decades.
Right.
Japan as well. So like, you get into a situation where, yeah, like on our side, we need a weaker dollar. They want a weaker dollar. But then on the other side of that, the other way of saying that is a stronger yen, a stronger euro, a stronger whatever. And the problem is the other countries don't want that to happen, because then all of a sudden their exports that are, their export side gets hit. And so we're going to get into a situation if the Dixie gets too much lower, which again, it should, to return to a fair value on a purchasing power parity basis or balance of payments basis, certainly needs to go much lower. The problem is if it goes much lower from here, I mean, we have the euro basically at like already at the level that the European Central Bank has said is their line in the sand, which is 120.
Yep.
So anything above 120, and Europe's going to start probably intervening in some way to weaken the euro. So like you get into this situation where like we need a weaker dollar, we want a weaker dollar, but then Europe doesn't want the euro to get too strong. So you get into this like battle where we're trying to weaken our currency to get it back to some semblance of a fair valuation, but then it's causing strength in all these other currencies. So these other countries are going to be doing things to weaken their. So yeah, you get into this whole, and like I don't know how all that plays out.
Yeah.
That's a lot of chaos, a lot of political, maneuvering and that sort of thing, and that's not really that's not what works for my brain.
Yeah.
So I have no idea how it all ends up working out. The way that you resolve that though is you do a Mar-a-Lago Accord. You get all the countries together. You say, look, the new exchange rate for dollar euro is this. The new exchange rate for dollar yen or yen euro or whatever it is, you set those new exchange rates, and most likely they will use gold as a way to do that. They'll devalue to differing degrees against gold. And by doing that, you basically set a new exchange rate. That's one way to get around it. Because like otherwise, if we just keep trying to do policies that are going to weaken the dollar, well, it's going to cause strength by definition in these other current is. And so really the only way to resolve that kind of push pull and that clash is to get all the countries together and just say, look, this is how it is.
Yeah.
And kind of tell them what the new exchange rate is going to be.
And so, from this, I have here in the title, the de-dollarization, the silent depression. Talk to me a little bit more about the silent depression from like the different sectors. We have the people who are lower middle class. We have people who are, talking about the 1% earlier as well. Are there any other things that you think are like, missing from the conversation around silent depression? I've heard people, the fourth turning obviously comes up. There's all these different words that come up to describe our state of the world that it seems to be. That, for whatever observations they have. I'd love for you to kind of dive in a little bit more into that.
Yeah. So I think this is one way to think about it. This is total civilian wages as a share of the M2 money supply. And of course, we established earlier the net worth of the top 1% has been up and to the right. Total net worth top 1% up and to the right for them. Of course, even also as a share of GDP as well, it's also up and to the right. But the average American is not. The average American's wages are doing the exact opposite and falling relentlessly down and to the right. So what we're looking at here in white is the total civilian wages calculated by the average hourly wage, the civilian labor force, and then the average hours or is this hours worked per year? I forget if this is hours worked per year. Yes. Or average days. I did the math earlier. So, but this is, you can think of it as like the total annual wages for every single American working in America that's non-supervisory. This is their total wages as a share of the M2 money supply. And, historically it was like 82, 83, 84%. Well, it's 44% now. And this is as a share of the money supply. So, and then, you look at average hourly wage in gold terms, it's kind of similarly brutal. Personal income as a share of M2 is similarly brutal. Labor force participation rate peaked 25 years ago, much like wages here. Average hourly wage in gold is actually declined by like 83% in gold terms.
That's insane.
So yeah, it's not good. And
Wow.
really, like, I don't think it gets better, unfortunately. I had a bit of kind of cautious optimism that it would, but I don't know. I think honestly, with the policies of like negative real rates and these sorts of things, I think it gets worse, unfortunately.
Wow. Well, what do you think? Do you think for those people who are kind of in a not great position, Bitcoin makes sense for them as an investment, or do you think for that type of situation, maybe Bitcoin, like where do you sit with
Yeah,
this?
I mean, what you need is something that outperforms monetary debasement. That's really the secret here. And Bitcoin does that.
Hmm.
Nasdaq is really like QQQ is really the only thing that kind of comes close.
Hmm.
And recently gold has started to really kind of outperform. So yeah, it depends on kind of the time period and timing, right? When are you going long gold? When are you going long the Nasdaq? It takes it's not that simple. It's just, oh, just put all your money in Nasdaq, Bitcoin, and this, and you'll automatically do better. But generally speaking, that's kind of how it goes. You have to save in something that outperforms, that appreciates at a faster rate than the money supply, because your wages are underperforming the money supply. This is two ways of measuring kind of the same thing, and both of them,
Hmm.
the average hourly wage in gold terms is kind of another way of thinking about it too. That's underperforming the
Dude, this is so
monetary
bad.
debasement. Yeah, so you need to do something that you need to store your wages in something that can't be printed,
Yep.
that can't be debased. And yeah, like I personally think that gold, I mean, I was buying it in 2022. So it's a bit of a different risk reward calculation here after the parabolic run. So it's kind of hard to like, to tell someone that has no gold exposure, oh yeah, at the this look, parabolas can always get more parabolic, right? I'm still very bullish gold on the next decade, but it is kind of hard to like tell someone to buy gold when it's literally like, vertical. It's
Yeah.
kind of hard to do that. But yeah, like Bitcoin, like the cool thing about Bitcoin, especially right now, is like it has volatility to it, right? So it pulls back,
Yep.
like we've seen, recently, gives you these opportunities to go long. And generally speaking, Bitcoin is going to outperform the monetary debasement that is keeping these charts down into the right.
Yep.
Because gold being one proxy for actual kind of monetary inflation, wages have underperformed gold. If you use the direct money supply, personal income in money supply terms, is what we see in purple, that has been down and to the right for 25 years. If you look at total wages as a share of M2, that really peaked back in 1981. So yeah, I mean, certainly for the past 25 years, uh, this is the silent depression. And like, you add the labor force participation rate, which is exactly what it sounds like, the degree to which people are participating and employed in the labor force, that also peaked 25 years ago. So yeah, I think unfortunately it probably gets worse before it gets better.
Do you think the reason people don't talk about it is because they don't want to think about it, like ostrich in the head type of thing? Why do you think it's the silent depression that nobody knows about? Like everyone else, except for, I mean, obviously our yapper, us yapping on X, we are very well aware of it. It's all that we can think about. I mean, it entirely changed the way I look at retirement and long-term investing. Was like, I'm not looking at what's going up. I'm looking at what's not going down. That's the only
Yeah.
thing I care about. It's what is going to outperform everything that sucks. And so it was so simple once I got that across my brain in terms of how do I think about storing wealth. But why is it you think it's a silent depression to the average
Well,
person?
I mean, when I kind of like created that term, no one was really talking about like the economic issues that everyone
Oh,
is
okay.
talking about now. This was like, yeah,
Interesting.
why it was like a year and a half ago, I want to say. And no one was really like, now you go on X and even non-macro, non-Bitcoin
Mhm.
people,
Of
everyone
course.
is talking about this. So back then it was a bit of a different time.
Gotcha.
There was like not really very many people talking about this sort
I
of
must have
thing.
gotten lucky because I have always had you in the Bitcoin space. So I was, oh, we've always just talked about it. Like it's, we've always
Yeah.
been, you're like, no, it's just me.
Yeah,
That's pretty funny.
now everyone is kind of recognizing something is broken. They
Yeah,
don't know what to pull up in trading view. They don't know how to think about it. They don't know how to
sure.
abstract it or conceptualize it, because you have to look at it in kind of an abstract way. You have to look, if you just look at the nominal, like average hourly wage, right? If you just look at what the government reports, it looks like everything's great. Look, that thing is
Yeah.
up and to the right. It's even kind of it's kind of a little
That's
even
what they show on
parabolic.
TV. That's what they show us on
Um,
TV.
yeah, like this is what they show you on TV.
Yep.
Or same thing is true with like the unemployment rate, right? Like if you look at unemployment rate, the unemployment rate, the U3 unemployment, this is the headline rate. This is at basically like record lows. But once you include like youth unemployment rate, it's a different story. Youth unemployment rate is like 10%, So it's a bit
Oh,
different with youth unemployment rate, obviously. Here we can see that. So yeah, youth
dude,
unemployment
how do you
or
find these things? Are these yours? Did you create these? Like, where do these indicators come from?
no, they're just data
They're
stream
just
like
out
from
there.
TradingView.
Wow. So
Yeah.
cool.
And then there's like U6. So U6 is a different way of measuring unemployment. This looks a lot worse than U3. U6 starts to include the fact that like if you're part-time for economic reasons, and those sorts of things, right? It's a broader way of thinking about unemployment. This is similar to youth unemployment, showing kind of it's not like recession level
Mhm.
unemployment, but it's still a lot worse than what they show you on TV, which is
Oh, yeah.
U3. So yeah, it's just yeah, it's like knowing how to think about the data that they're trying to give you, and how to conceptualize it and kind of think about it. Sometimes you have to look at it kind of abstract sort of way, but
Mhm.
like once you see all this stuff and kind of once you know what each indicator really represents, because sometimes like if you're trying to like show like financialization, right? This is like a massive problem with
Mhm.
the US economy, is that it's hyper financialized. Well, like I don't know, for me, just the way my brain works, I was like, well, what better way to do that is taking the S&P 500 and dividing it by the average hourly wage, because this tells you if the S&P 500, which is kind of one way to think about financial assets, um, a good proxy for financial assets. Well, if this is if the growth of the S&P 500, if the growth of the stock market is outperforming the average hourly wage, this ratio will increase. And I
Mhm.
don't know. To me, it just kind of made sense. I just, and
Mm.
I've been showing this chart for a long time now, but yeah, you kind of have to think about it sometimes in a little strange or like
Wow.
abstract sort of way. But yeah, like going back to like the mid 70s, it took 18 hours of work to get 1 unit of the S&P 500, to get one share of SPY. On average, right? You work about 17, 18 hours. So was that like a couple days, 2 days, 2.5 days, and you could buy one share of the S&P 500. Now that number is 212. So that's the degree to which the stock
Wow.
market,
Wait,
yeah.
what? That is so much higher than I thought.
Yeah, so the stock market's outperformed the average hourly wage by 1,269% since 1981.
Dude.
And even just going back to like say 2008, before 2008, right? Like 2007, even since then it's outperformed by 150%. Um, you went from taking 2.5 days of work, right, to buy one share of SPY to 200. What is that? That's like 5 weeks of work. So this is that uphill battle, right? It's
Yeah.
like financial assets are running away from people. It could be home prices, gold, could be the stock market. All of these things are appreciating at faster rates than the wage. And not only that, but then your wage is underperforming the money supply. So it gets just compounded. The problem just compounds on itself when you have, assets over running faster than GDP, and then you have wages running slower than GDP and slower than the money supply. If people aren't saving in gold or the stock market or Bitcoin or whatever it is, something that is outperforming currency debasement, their wages are like dramatically underperforming currency debasement and inflation. So that's how you get the K-shaped economy is everyone who owns assets, they're fine. They're the upper leg. And then everyone who works for a living and doesn't own assets, their wages. I mean, you can see it. You can see the K, so yeah, it's pretty unfortunate, to be honest, the situation that we've got ourselves in.
That is one of the most unbelievable things I've ever seen. And so this is something is this what people have talked about with you? Like this particular graph, is that like a very specific thing people have, talked to you about and got your thoughts on? Because that might be the craziest thing I've quite literally ever seen on a chart. I mean, that difference is crazy. 2 days worth of work buys you a share of the stocks of the stock market. And today it's 200 days of work.
Yeah.
What?
No. 17, 18 hours. So that's like about 2 days of work.
Yeah.
Now it's 212 hours. So divide by 8
hours. Okay.
Yeah.
got
212
it.
hours.
I was like, okay. That makes sense.
It's still a lot, right?
Yeah.
It's still a lot. Yeah. So it's thinking about like, you have to understand like, what is your hurdle rate? And so, on a nominal basis, like all sorts of things, personal income, average hourly wage, all sorts of things are going to look like everything's fine. You have to realize, okay, but it's denominated in this like failing unit of account, the dollar. So you have to start adjusting for the failure of the underlying denominator by denominating in gold, denominating in the money supply. You have to kind of really, take it a layer or two deeper, because yeah, if you just go off of the like headline nominal number, it paints this picture that everything's fine. But yeah, total wages as a share of M2 money supply. And by the way, it's the same story if you do it as a share of GDP. It's the same general story, unfortunately. So here's as a share of GDP. So back in the 70s, total wages based off the average hourly wage of non-supervisory employees, you add all of their wages up in a given year. This equated to about 48% of American GDP. Now that number's 32%. So, you're also underperforming GDP as well. So yeah, like the uphill battle, the degree to which the average American faces an uphill battle is pretty hard to understate. And I think this is why you see so much angst and disaffection and anger and rage and populism, and especially with the young people, right? Because like I was told, just work really hard. So I worked really hard for like 16 years in a given industry, right? Like I picked an industry. It was recession proof. I was looking for my first job as Lehman Brothers was failing.
Were you?
And
wow.
Yeah, it was like, I don't know, like a month or two, I think, after Lehman Brothers failed. That was when I was entering the job market. And, like the boomer said, just, work really hard. And so, okay, I found this industry. I found this kind of sector within healthcare, and I just did it. And I never called out, and I always said yes to overtime. And I always tried to have, be in a good mood and show my boss that I was a good worker. Right. And I did the whole thing, and I climbed the corporate ladder 16 years, eventually got to that like top role, right? Like as a director of a department in that field. And like I blink, right, from 2021 to 2023, during that time period, I'm making like, basically six figures. And I go from being able to afford a home in one of the kind of shittier suburbs of LA to like, wait, what? I have to triple. I have to make $300,000 to qualify on that same house that I was just looking at. And so, yeah, you do that to young people, they're gonna be pissed off. You do this to the average American, they're gonna be pissed off. And this is part of why you see like the suicide rate, the deaths of despair are double the rate that they were during the Great Depression. Suicide rate hasn't been this high since the Great Depression. This is why you see all that stuff. This is why you see mass shootings and all the horrible like political the like mass violence sort of stuff. It's at the end of the day, you do this for decades upon decades upon decades to people. And, yeah, you get a pretty pissed off populace that was gonna vote for populists, whether it be on the right wing or the left wing. Right now, we have a right wing populist, but it can go the other way too. We see in New York, it's a direct response to this. Like, this chart, this is like all you really need to know. Total wages as a share of GDP. Versus the degree to which financial assets, and therefore the top 1% who own all those financial assets, the degree to which those people have outperformed your average hourly wage. I mean, it's like, I could show dozens of charts that illustrate the same concept, but it's all the same thing. You have financial assets. The only things that have outperformed GDP, certainly not wages, right? Is certainly not like the average American, which is in green here, right? That person has been underperforming GDP. And so, like, consumer spending is a large portion of the American economy. So you think, okay, well, like, if the average American is falling further and further behind, if that old middle class that used to exist, I don't know, 3 or 4 decades ago, if that middle class that kind of built America, if they are getting poorer and poorer and poorer, and their wealth is shrinking and shrinking, uh, what is coming in to prop up the economy? Like, something
Yep.
has to be outperforming GDP. And the things that are outperforming GDP, government debt, government spending, and of course, financial assets. Oh, also, the corporate profits are outperforming GDP as well. So I can show corporate profits. Those have been outperforming GDP. So you built an economy that the things that are outperforming GDP, debt, corporate profits, which have doubled as share of GDP going back to like the early 90s, they were about 5% of GDP. Now they're 12% of GDP. So corporate profits outperformed GDP over the past couple decades. Financial assets, S&P 500 in white versus the average hourly wage. Financial assets have outperformed GDP up and to the right. The net worth of the top 1% has outperformed GDP up and to the right. Meanwhile, and you have government debt outperforming GDP, which is why government debt to GDP is going up. Is government debt is growing faster than GDP is growing. And so, yeah, that is what the modern day American economy is. Government debt, more and more government debt above and beyond the rate of GDP growth. More and more government spending not just government spending that is like keeping pace with GDP growth. It has to be above and beyond GDP. So you have debt and government spending growing faster than GDP. You have corporate profits growing faster than GDP. You have, financial assets, S&P 500, the NASDAQ, whatever, growing faster than GDP. That's what our modern day economy is. It's certainly not the average American, certainly not the middle class. That person has been underperforming GDP, no matter how you slice it. So yeah, this is kind of the modern day K-shaped economy. You can see it, right? Corporations have been doing great since the China shock in 2000. Corporate profits have basically doubled as a share of GDP since China was admitted into the World Trade Organization, and we kind of took this like globalist approach to economics and trade. Corporations did really well, therefore the stock market did really well. And the average American, like, their wages have underperformed GDP. Their wages have underperformed inflation. So yeah, this is that K-shaped economy. It's corporations, not all corporations, right? I'm not one of those sorts of people that what we're talking about here is like 10 corporations, right? We're not talking about like the average LLC down the street that has a small business.
Sure.
Those guys are hurting, right? Like the average corporation, even small and medium-sized public companies, right? Like even in the Russell 2000, those guys are hurting, and they're public, they're in the stock market. Like they're pretty together, but like even those guys are hurting. So really, when we're talking about corporate profits, we're talking about like Apple, Nvidia,
exactly.
Mag 7.
And that's another part that's so huge, is that it's not exactly a representation of the top 500. It's a representation of that top 7. I mean, that Mag 7 is coined for a reason. I mean, it's basically those guys. Or six,
or 5.
Yeah. Whichever ones you, yeah, exactly. Yeah, there's probably maybe a couple that don't need to be in there potentially anymore. But no, dude, that's mind blowing, honestly. And it completely restructures the way, in my opinion, this is entirely restructuring of the conversation around money. I mean, this is my biggest flip probably, and it was interesting timing that when we rebranded from Wolf Crypto to Wolf Bitcoin, It wasn't just because we like Bitcoin more than crypto, or we thought it was a entirely different conversation than crypto is. But it was more so because I noticed that the only conversation that there is left to have is the currency conversation, because we're seeing all the fiat currencies and then it's just against hard money. They're like, there's no other conversation left. Like, there are all the other currencies that have, every single one of them have failed. And then there's gold over here who's been around for thousands of years. There's Bitcoin has been around for 20 years and for some reason has been priced in. This whatever qualities Bitcoin holds is worth $120,000 a coin. And then there's everything else. And I'm like, so there's nothing else to talk about. So we have to be Wolf Bitcoin. And that was kind of my thought. So I'm curious on how you think the conversation is going to change and evolve over the next 4 to 5 years. Like what are the is it going to be more of this, just like kind of more gas on this? Like what is it going to look like, you think?
I think that like in a negative real rate environment where you have Trump advocating to get an absurd amount of Fed rate cuts, and you have negative real rates where rates are below inflation. Say he gets his wish and we get the federal funds rate down to say 1. Well, core CPI is at 3. It'll probably be at 4 once he does that. As they're cutting, it'll probably go up, right? So now it's at 4. Inflation's at 4, and you have the interest rate on short-term debt. So like your money market funds paying you 1%. So you have a negative 300 basis point real rate there. In a negative real rate environment, assets are going to go up and to the right. Like gold is going to continue to do what it's been doing. Stock market's going to continue to go vertical. Hopefully Bitcoin is along the way, hopefully outperforming, right? That's the hope. So yeah, like I think it gets worse. And you know, that even if they were able to snap their fingers and get their wish of like a weaker dollar and trying to solve the kind of trade balance issue, I mean, this sort of thing to make America net productive again, back into something that works for the bottom 90% is going to take 15 years, you know? So in those 15 years, it's going to probably just get worse. But it is possible, you know, like the thing to point out, personal income as a share of M2. I'll put this back up and then I'll take this one off. That only starts in 90. So back in the last period of populism, we had, I'll take this one off too. So back during the last time that we had populism in the US was kind of 1965 through 82. During that time period, this personal income as a share of M2 in purple had peaked out in 2000, right? It's been down and to the right for the past 25 years. But look at what it did during that period of time. It was up and to the right, right? So another way to think about that, personal income was growing faster than the M2 money supply, the broader money supply. And that was the case really all the way up until the late 90s. So it is possible to have real growth where personal income, probably not the average hourly wage, because again, personal income is kind of more broad way of measuring income, but you can have personal income outperform the money supply growth. And look, like corporate profits didn't really do that well for that period of time. Like they basically went sideways up until 1980 and then kind of down. Like you could argue this is a downtrend here in corporate profits as a share of GDP. So yeah, like I think that, you know, there is room for improvement with the right policies. But I think it's just such a like tricky thing because, you know, the way to fix the wealth inequality problem would kill the bond market, and you can't have that, right? You would nuke the bond market if you were to try to look. And Trump almost like he was doing it right during April, the tariff liberation day, everything, the S&P, you know, the NASDAQ, equity. It didn't last long enough to probably see it in housing, unfortunately for me, but we saw it certainly in the equity market and more liquid measures cratering, right? Like every day they were just gapping down. And who did you have on CNBC? Who did you have on CNN whining about these policy, you know, having conniption fits about the liberty? It was all the wealthy, right? It was all the people. Like the average dude that we talk to in a space, he doesn't care. He doesn't have 8 figures and some, you know, QQQ or SPY.
Yeah.
Like, he doesn't care. He's got like $5,000 in a 401k. He doesn't give a shit. So
Yeah.
it wasn't the average American that was hurting from those tariffs, from the market reaction to the tariffs. It was the top 1% that own all those assets.
Yeah.
And so it kind of looked like, okay, you know, maybe they're really going to hammer the like K-shaped wealth inequality thing, and just crush stocks, and let them keep falling. But then the bond market started to sell off. Then the foreigners started to dump some of their holdings in U.S. Treasuries. We saw yields go straight up, and then they were selling the dollar, and yeah, they couldn't have that. So the bond market and global capital, foreigners forced Trump to capitulate. That's really the story with kind of how that all played out. Foreigners forced Trump to capitulate on his core policy promise of tariffs. That's what really happened. And that's the consequence of, like, when you run a current account deficit of, you know, 4 or 5% for decades, when you run these insane trade deficits, the rest of the world is buying your debt, especially as you're the reserve currency issuer of the world. So
Mhm.
foreigners have accumulated tens of trillions of dollars of equities, of real estate, of corporate bonds, of US Treasury bonds. And, like, at the end of the day, they own 95% of our GDP, so about $27 trillion. They own 27 trillion on a net basis, not gross, net, meaning you take the difference between what do we in America own for, you know, foreign bonds, foreign stocks, versus what do they own of our stuff, right? You take the difference between those two, it's $27 trillion. That works out to about 95% of GDP. And so, yeah, in the blink of an eye, if the foreigners don't like the direction our country is going in, they just start selling assets. They start selling their
Wow.
stocks. They start selling their bonds. The
Yep.
bonds is really the way to get. If you're a foreigner and you're really unhappy with what the U.S. government's doing, just sell your bonds, sell your U.S. Treasuries.
Yeah.
That'll force them to. And so, like, at the end of the
Like,
day, you get to a position where you're like, are we even a sovereign country? If foreigners can just dump, like,
yeah. Wow. That's a good point.
so that's part of why it's a national security issue. It's gotten so bad that, like, we don't really have sovereignty, because, like, the rest of the world, you know, if we do something they don't like, they just sell 20 billion of US Treasuries, and, like, yields go straight up, and they know we can't, with debt to GDP of 125%, with interest at 23% of tax receipts, like, you know, the 7% pro-cyclical deficit. Yeah, like, they know that we can't afford higher rates. So they can basically force us to do whatever they want. That doesn't sound like sovereignty to me. And, you know, that's what we
Wow.
saw in April.
Yeah, I had not really thought about it like that. That is entirely depressing that we
Yeah.
can't. You're right. You can't. You're funded by a bunch of people, and if you step out of line, you
Those
lose the
creditors.
funding which you need
Yeah.
because you've built your whole economy on that stuff.
Yeah. Yeah. You lose your creditors and you're
Oh.
done. Yeah, like, you know, they literally, it was like, I mean, I was doing video. It was right when I started the YouTube channel, so I was
Oh
watching
man.
it very closely. I was doing videos, and it was like 4 days of bond selling. That was all it took. 4 days, 4 or 5 days. It was all it took. And now, right, 2 months later, we got the tick data, so we could actually see how much bonds were actually sold. I think it's like 40 billion, right? We have 37 trillion of debt. External debt, I think, is about 35% of that. So whatever 35% of 37 trillion, call it 10 trillion, I guess. About 10 trillion is external debt. And they sold like 40 billion, right? They could have done that another like 3 months. Right. And imagine what yields would have been if they only sold a fraction of their holdings. It was only a tiny fraction of the, call it 10 trillion that they own ish. I think around, it's somewhere around there. It's not a precise figure. Call it 10 trillion that foreigners own of our debt. And
Mhm.
they sold like 30 billion, 40 billion, something like that. And that was all it took to get us to capitulate. So that, you know,
God,
it is what it is.
dude, that's mind blowing.
Yeah, and the other thing I'll point out during that same period of time where corporate profits were underperforming, um, underperforming uh, uh, during that time period, the S&P 500 in gold terms during this last period of populism declined by 85%. So from just like pick a midpoint there to here, declined by 92% from call it the mid 60s, kind of early 70s, up through the early 80s. That decade, stocks in gold terms fell by 90%. So if you were in the S&P 500, if you were in the Nasdaq, you're like in nominal US dollar terms, you were basically flat. It went basically sideways. But in gold terms, after adjusting for real currency debasement, you were down 90%. You basically got all your wealth wiped out. And that was the last period of time the US had populism. So, is it a perfect one-to-one analog for what we see today? No, but
Right.
look at what personal income as a share of M2 was doing during this period of time. Corporate profits were basically down in red. Corporate profits as a share of GDP, those were declining as a share of GDP. Personal income as a share of M2 was up and to the right.
Mm.
So, yeah, if you had a bunch of money in the stock market, you lost 90% of your wealth in a decade. If you were working for a
Oh
living,
man.
you actually outperformed the money supply growth, right? During this era. So there's always winners and losers. It just takes, the key difference is during this period of time, they had a lot more flexibility because debt to GDP was like 30%.
Yep.
And so now you're stuck where you can't just like nuke the equity market now because the equity market is one of the prime marginal drivers of tax revenue. So you nuke the equity market too much, even if it just goes sideways, if it's not growing, right? Even if it just goes straight sideways for a couple years, that's going to hurt the revenue side for the government so much that you blow your deficit out to, it's 7% of GDP now. You probably blow it out to 8 or 9% of GDP. If it goes just straight flat, if you start to get a decline in the S&P 500, like a prolonged decline, you'll see tax revenue get hit. Well, expenditures are going up, right? So if your revenue is getting hit and your expenditures are growing at say 12% year over year basis on average, that's kind of the growth rate. Your expenditures are growing at 12% and your revenue starts to shrink. That 7% deficit goes to 8 very quickly, then to 9, then to 10, then to 12, then to 15. And at a certain
Mm.
point, you are in emerging market sort of levels of your deficit where you just got to print the money. So, yeah, the debt is really kind of unfortunately like a constraining factor. You can't just now in real terms. This is a different thing, right? Like basically what happened during this period of time, the S&P 500 just in dollar terms went straight sideways from 65 to 82. I think it was up like 2%. Basically went sideways for what was that 17 years. Just went straight sideways in dollar terms. In gold terms is really where you got wiped out. That's where it was shown. So like if they can engineer a similar sort of thing, then where they wipe it out in real terms, they wipe out the overvaluation of our stock market in gold terms or in Bitcoin terms. But in nominal terms, right? Maybe they can get like 2 or 3% growth, but even that is going to hit the revenue side for the government. So they're just really stuck because of the debt, because of what decades of both, both parties did it to us. Both parties
Yeah.
stuck us with this from call it the 70s all the way through to until recently. I mean, look, like Trump is a lot of things, but he is the first president of my lifetime to actually like try stuff. You know what I mean? Like to try to balance trade. Now, look, like he's not going to be able to do it, but like at least he's like trying with the tariffs. I appreciate that. I know the top 1% is very unhappy, but like
Yeah.
I appreciate that for the average American. How did no one try this before? When I was growing up, when I was paying attention to politics at like 10, 11, 12 years old, because I was a nerd, I remember it was the Democrats that used to talk about we shouldn't go down this globalization hole. Like going down that path is going to hurt
Really?
the average American worker. Yeah, they were like
Democrats were saying this?
it was the Democrats that were saying this, that were opposed to NAFTA, that were opposed to these globalist trade structures. It was the Democrats. And the crazy part is that like you look right? All the stuff we've just been talking about, they were right. They were predicting that in the 90s. Some of them even going
Wow.
back to like the late 80s. They were saying this is what's going to happen. The blue collar worker in America is going to get just screwed, right? Like they called it. Why are they not out on TV every single
Wow.
day going, look, we called it in the late 80s, early 90s, early 2000s. We said this would happen if you let China into the World Trade Organization, give them most favored nation status like we did. We told you, 25 years ago that the average American would get hurt. And look at their wages as, whatever, right? Show any number of like 3 dozen charts. But they're not. They're like having hysterical hissy fits about a 10% tariff. So it's like, what?
Yeah. Wow.
It's
Well, why do you
weird.
think? Why do you think that's the case?
I don't know. They turned into something that I don't recognize. Democrats just somewhere, I don't know exactly where it was. Like Obama was recognizable as kind of like a Democrat, but like somewhere after Obama.
Yeah, I think it is, dude. I think it's impossible with social media with more transparency that comes out, and each time you pick up new people who start to notice things. Like the same with Bitcoin, right? Every time there's more people who find it, and there's like a new higher level support formed because there's a new base of people finding out about it. I think it's the same with the parties. People are like, wait a minute, I have values. These are my values. The parties are starting to shift. The people are starting to be sheep's in wolf clothing, and vice
they're
versa.
inverting. They're
Yeah,
inverting, right?
it's
So like,
bizarre.
yeah, when I was
so bizarre.
like, starting to pay attention to politics and kind of get really interested in the world around me, right? And I had the internet, right? Back in, say, what that would have been 2000, 2001-ish. Like during that era, like if you would have told someone this is what the average Republican would believe, they'd be like, no, you're talking about Democrats. And if you told them what the average Democrat would believe today, back then, they'd be like, you're describing a Republican, right? Like, so we're living through this total inversion where everything from free speech to corporate, like your view on corporations, right? Like the modern day Republican Party's like, look, the average American's been getting screwed, like screw the multinational $1 trillion corporation. And then you have the left, which used to be the champions of the blue collar people, going, no, how dare you hurt Pfizer's revenue? How dare you hurt it? Like, what? So how dare you go after, Moderna's, it's like, it's just such a total inversion of what the parties used to stand for.
I can't think of any other answer than whoever gives everyone money. There's some slapping going on. There's slapping and there's noise being thrown on purpose.
Both parties were kind of bought out by the corporations, like the corporatist structure of the government. Like you can see it in the data. Both parties got co-opted. It was only up until and look, Trump is not perfect. But like, again, it's the first time that you sense that someone's at least willing to like kind of try. Like, okay, well, the old thing like is not working. Like hyper globalization is like not working for most people. So let's try tariffs. And you have a very small minority of people just having a hysterical hissy fit about it constantly. But like at least he's kind of trying. Now look, there's all sorts of like negatives, right? Like in the kind of like greed or like corruption, right? There's all the stuff that I think are like some of the criticisms are valid, right? Like no man is perfect, no leader is perfect. There will always be flaws with people. And Trump's not immune from that. But like, yeah, you get to a point where he's kind of like this first populist that we've really had that I've ever seen. Like the older Republican Party was really no different, right? Like they were just, how dare you hurt Pfizer's revenue? They pay my campaign. They finance my campaign. How dare you go after the multinational corporation? The Republicans were like that too. And the Democrats ended up becoming that. It really wasn't until this like populist thing started that, look, he's again, not perfect, but like you're starting to feel, whether it's Trump on the right or Mamdani on the left, this kind of uprising of populism is really the first time in my life that I've seen a real kind of effort to try something different. And look, I don't think that a wealth tax or, banning billionaires or like, right, like some of the things, like, you know, we know how a state-run grocery store goes. We have examples of that. Like, you know, I, personally, I don't think that these guys have like the best ideas, but they do accurately identify the problem. That is why Mamdani is going to win. I've been saying this for like a year or however long he's been written, 9 months, whatever it's been. I said as soon as he started to run in that primary, I said, yeah, he's going to win. People were like, oh, you're crazy. I'm like, oh wait, it gets worse. AOC is going to win as president, and it was like breaking these people's minds, you know. And this was like 9 months ago. And yeah, like those types of people are going to continue to do well because they are hammering the same point that Trump kind of sort of tried to hammer, which is like, look, the average, whatever system we have is not working for the bottom 90%. That's all you have to say. And then you just hammer affordability, you hammer wages, you hammer inflation, you hammer cost of living, and you promise to fix it, you will get a huge amount of support. You will win. It is really that simple. And it's kind of mind-blowing as two young people, to me at least, you know, talking about this. It's like, duh, right, to us. But you look at these boomer politicians and they have no clue.
Yeah.
They just
they don't think they can see it. They can't see it.
They know because they have the house, they have the
well, I think
vacation
they're 30 years into the gig. They haven't thought about changing anything good
because it's worked great for them.
In 30 years.
It's worked great for them.
Yeah, they got money. They're like, look, dude, that guy gave me money. He told me to do this, and it's working.
How dare you criticize the system that made their life so great, right?
And it makes sense. Like I can you almost can't blame them because you're like, of course you fell into that. Like you went that direction. Not of course, but like you see it happen so many times. You see stuff happen over and over and over again. It's like, look, you go into the system, I get an idea, you're young, and then you get in, you get a couple dominoes knocked over, and then you hit your first wall, and you realize, oh, this can't change because they won't let it change.
Yeah.
How am I supposed to fix this then? And then now you're in the game. You know?
Yeah, and then you further peel back the onion. You look at like Medicare outlays as a share of tax revenue. Back when Medicare, you know, back when the data starts in the late 60s, mid 60s, this represented about 1% of total tax revenue. Medicare, the program of Medicare, represent about 1% of tax revenue. 24% today, right? So whether it's Social Security, whether it's Medicare, which you and I pay for in tax. It is a direct like transfer of wealth to those same people, right? The other way of putting this is Medicare outlays have grown that much faster than tax revenue. So if we go to 67 up until now, Medicare has grown, Medicare benefits, right? The amount of dollars that old people are getting have grown 627% faster than tax revenue. Right. So like they're outperforming because their assets that they own, they have $1 million in a stock portfolio. That's doing great. They have a couple homes, right? Those are doing great. And then you look at like the other side of it and like the benefits, whether it's Social Security or Medicare, are outperforming kind of overall GDP, overall tax revenue growth. You know, so it's like it's an even more pronounced stimulus for the old people. And yeah, you get what we're seeing in America today. And it's like, you know, this can continue for a long time. It can always get worse. But eventually I keep saying like, yeah, if it doesn't change, like it can continue for another 2 years. I don't know, 5 years, maybe 6, maybe 8. But eventually you get to a point where there's like, you know, I had to read A Tale of Two Cities and we studied like the French Revolution and in AP Euro history, I think it was. And like, you know, you eventually get to a point where the people are like carrying around guillotines and execute, you know, the wealthy person walking down the street in Beverly Hills is getting executed. Right. Just for being wealthy in Beverly Hills. It's like, that's not the world I want. That's not the America I want. But it can continue. Like it can always get worse, unfortunately, but eventually you break society. And I think we're starting to see that breaking. Kind of now. I mean, you look at what happened a week or two ago, like you see these sorts of things and like all the evidence is pointing to like the social fabric is like, it's not just tearing, it's like torn in half and it's on fire.
But it does. But there's also a revival, you know, from the ashes, you know?
Yeah, but it gets a lot worse. It gets a lot worse before it gets better, I think. There is for sure. Yeah. Like, I grew up in the outdoors, and like forest fires are the single best thing for the forest to actually come back healthier.
Mm,
It is a part of nature that we have this destruction and this this rebirth, creative destruction, that sort of thing. But like, the next 10 years are going to be extraordinarily difficult, not just from a markets perspective, not just from making money, keeping money. I think the next decade is not going to be about making money. I think it's going to be about
preserving wealth.
not losing money. It's kind of how I see the next decade.
What other
Um,
assets are there? There's Bitcoin and gold. What is there
that's
anything else?
that's
Shoot,
it.
not
That's all
even
I like.
yeah.
Ammo, right? 223 ammo is probably good. Canned food is probably good. I don't really like silver because it has too many industrial uses. So
Mhm.
they can't really let silver get too far.
What do you think about gold's risk of the fact that if they one day are able to duplicate the compound that is gold, there's
Yeah,
now an infinite amount of gold, or a meteorite hits and it's filled with gold? Like
yeah,
that is
yeah.
terrifying to me.
They mine it on an
Like,
asteroid. I've heard all
I
of this
can't
stuff.
buy gold. I want to buy solid physical gold because I feel like the chances of me running into that situation in my lifetime are low. But I
Yeah.
can't because I know Bitcoin exists.
Yeah,
So it's
well,
like,
look, it's a risk, and I always say with Bitcoin, look, what's the risk of an EMP and the internet going? What's the
mm,
risk of every electronic device, including my Trezor, getting fried,
yeah.
right?
I
So,
mean, in that
because
case, we're cooked in every single
if you
direction. It
if
won't
you
even matter.
don't have your seed phrase on a metal plate and your hardware wallet, and there's an EMP, you're done. You're wiped
Oh,
out.
wait, is that why the cold card is a metal piece of like a metal sheet? I
Yeah,
never
so
even realized that's what it was.
yeah, because anything with a computer chip and an EMP just gets fried. You're done.
Oh,
There's
okay,
no
that's
recovering it. It gets totally wiped out.
great
So
to know. Thank you.
it, if there's any Bitcoiners that like have a Trezor or
Yeah,
cold card or whatever, and you haven't put it on a metal plate, that is part of at least in my
okay,
opinion, this guy that
genius.
is anxious all the time thinking about what ifs. Yeah, like, you have an EMP or some kind of solar flare craziness or something.
Wow.
You could have a situation where everything and anything with a computer chip is just done forever, permanently. It's done. And so you want to have some kind of physical. This is why I like gold, is because it's a physical thing I can hold in my hand. It's buried in
Mm.
random places in LA.
Do you
But
think do you think Bitcoin will retain any kind of value in that scenario? I mean, that's obviously such an extreme
uh,
scenario, but
I mean, it depends. You have to be able to sell it, right? So if there's an
sure.
EMP and no one can sell it because no one can access their phone, no computer works, right? No phone works. Your smartphone doesn't work. Your computer doesn't work. Your Trezor on its own doesn't work.
I
Your
wonder what
cold
kind of
card doesn't
assets
work.
matter at that point. In my head, it
Gold.
just you go straight to you get straight back to like basically guns and gold, like
Guns,
whatever you have.
yeah, ammo and gold,
Yeah.
I think, and canned food
So
is
you're
good.
you're talking physical. You're talking about literal
Yeah.
canned food, not the stock of
Yeah,
like ammo
no.
or like tracking the stock of ammo or whatever, like that kind of thing.
No,
Yeah.
no. I mean,
Yeah, yeah.
like,
Like literally
I
buy that and stash it
I
away.
have, like, 6 months of canned food in my
Wow.
closet, so
What do you think about that? Is that even enough? Like I of course that's in the worst
yeah,
case scenario. You've got the situation, but also like if that happens and you only have 6 months, I'm kind of like, I mean, my head. I watched this video like a couple weeks ago. It happened right after Charlie Kirk's shooting, and it popped up, no doubt, from just the fact that all the things we're thinking of, like how the hell did we get here, and what is what do I need to do from here? And this video popped up and it said how to buy like raw land and like, how to get out, like, and sort of like take your own autonomy and sort of thing. And I remember thinking like, dude, I think if you can make it, you like almost practically speaking, you should move to a farm in the middle of nowhere. But
yeah,
also if you do that, now you're the target because you're the only place that's worth
yeah.
staying. So I'm like, where
You
can you
gotta
win
be
in
able to
any
defend it.
scenario?
You have to
Yeah.
be able
So
to, and the problem is, like, if you just have you and, I don't know, a partner or something, right?
can't do
That's
that.
not enough to defend, like, a big piece of
Nah,
you need, like, a commune,
you need a
right? So now
squad.
you're talking about a group of, like, a community of people with a collective defense network, right? And communications, and how are you communicating if it was some sort of EMP, right? And I have radios, but they would be fried in an EMP because so like you get into all these there. I don't think anyone is 100% prepared for like a real honest to God, you know, kind of thing. I think it's basically impossible to be fully prepared. But I
Yeah.
think, yeah, like I think that trend of like it used to be like the cities were the place to be, I think that changed in 2020, and
Everything changed.
cities are deteriorating further and
No,
further.
yeah, I will
You
never
know,
live to it. I will never move to a city ever again.
it's horrible.
Seattle was my final city. Thank you for
LA
the city life.
is
I'm glad I experienced it, but I will not be coming back.
Yeah, LA is like, you see it firsthand, and it's
Yeah,
like, I don't want to be here. I want to be in
exactly.
like some random town in north. I want to be, I want to be away from a highway. I want to be
Mhm.
away from any kind of thoroughfare.
Mhm.
I want to be like in as far away from like metropolitan centers. I want,
Yep.
that's kind of how I'm thinking about it. And yeah, it's tough to balance, because like it's like on the one hand, I want to buy that self-sufficient property in Wyoming or
Mhm.
wherever. I want to be able to do that with the solar and the well, right? And the water filtration system and the underground like bunker thing. You can buy underground bunkers. There's like all sorts of
How much
companies
do
that
those
sell them
cost?
for, it's like 90K, 90 to
Oh,
120K. Yeah, and they put it, and it's got CBRN full filtration.
wow. Okay,
So
that's intense, but that's not
it's
actually as
like
bad as I thought.
real, yeah, it's like real honest to God, like
Wow.
nuclear protected,
So
yeah,
you like could
underground.
be good with like 100 grand investments, basically.
If you own a property, if you can, because then, I mean, it depends what threat you're talking about.
Sure.
If you're talking about like nuclear, it's pretty hard to come back from that. Like you have
Yeah.
to, because the fish that you go to eat in the local stream are probably irradiated. So
Yeah.
so like it depends what the threat is. If it's civil
Oh, I'm
unrest,
fasting, dude. If that kind of thing, I've trained myself. I read the Bible and I read that Jesus fasted for 40 days, and I was like, oh, okay, why would you do that? And I was just
you
like,
can
that
survive
must
a
be
long
important.
time.
I
Yeah,
just remember
without
thinking
food.
like if he did that for a specific reason and then he did important stuff. So I was like, okay, the Lord said this is important. So I guess fasting, maybe even practically speaking, if you're in a scenario where you can't eat for a couple of days, like you have to be able to mentally like get through that, because back
Yeah.
in the day, hundreds of years ago, thousands of years ago, that's a reality. If you run out of money or you can't find something, you got to just not eat that day.
You don't
And I
find
just
any
thought about
deer?
it. We have
Yeah.
a weak society, like a really, really weak society, including myself. And I was like, dude,
Yeah.
I'm not hard. I'm not hard. Like I'm not
Yeah.
hard the way I need to
None of
be
us
if I'm
are.
going to survive. Yeah,
Yeah,
exactly.
like,
So
I like to think that I could kill someone, to protect my family.
sure,
That
it's
right?
tough.
Not like an evil person, not like a marauder, right?
It's
Not some
defense.
guy, not some roving band of like bandits, right? That I
Yeah.
know are trying to come and hurt me, but like some, in a true like honest to God, like things are bad situation. You have desperate people,
Mhm.
families. You have women and children coming to you like desperate to
Oh
survive.
man.
And like, could I kill a woman and her child that are willing to kill me for my food, right? Like
Wow.
you start thinking about these questions, it's like like I'm not I mean, if it happens, it happens. I'll try to figure it out best I can. But
Mhm.
like none of us have lived through a period of time anywhere remote to like full blown, kind of
Yeah.
none of us are really like I mean, there's a very small number of people like like yeah, there's a small number of people that could
Right.
probably make it, but like most of us probably won't,
I
including me.
I have a couple
Including
of
me.
like life goals. Like in my whole life, I had all these weird inklings of things I need to do. And one of them I'd seen, it was like changed my life. I'd seen this TED talk a long time ago, and the concept was he mastered like six different skills over 6 decades, and he was older, and he was like, look, every decade I switched professions. He goes, and I became an absolute savage over 10 years, and then I dropped it. He goes, there's nothing else to do at that point. And I remember thinking, man, first I gotta get rich. Once I'm rich, then I'll learn like martial arts or something in Asia, and I'll move there for a year, and I will just become a black belt or whatever. Like there are just life checklist things where I'm like, you have to do these. If you don't, it's fine. You probably won't need it, but if you do, you are so screwed. And like
Yeah, I would say
and so
like physical like skills, right? Like this is since my Twitter and YouTube and everything like blew up, I don't know, whenever it was. I get these like mostly young men that are like,
mhm,
what would you say to a 17-year-old or 18-year-old, or I have a kid and he's 16, and what, and the only thing that really makes sense is like, number one, save and scarce assets that can't be
mhm,
printed, and number two, learn useful skills, right?
yeah,
Like be a good person, and be good to your community and that sort of thing, of course, but like skills, right? Like, do you know how to change if in a true bad situation? Do you know how to change a spark plug? Do you know how to even change a tire? Can you even take a wheel off a car? Do you know how to fish? Do you know how to create the lure to fish or fly, right? I fly fished when I was younger. So like tying the fly, right? Like these sorts of things, it sounds dumb, but like those sorts of things are useful. Do you know how to fix a bike? Right? Bicycles could become like the primary mode of transportation. You know how a bicycle works? You know how a derailleur works? Right. So I do, because I was a biker when I was younger. So you know what I mean? But like
you want to be self-sufficient.
Yeah,
Like,
those
you
sorts
want to
of
be.
things. Yeah. Know how to I've this is one I don't know, but I would like to know and one day be able to skin a deer, right? Gut it, preserve it so the meat doesn't rot. Like these sorts of things, we've gotten a long way from survival mode as humans, talking on the internet all day and having this comfortable life. Like we are a long way from the savage reality of the animal kingdom, and like the thing that I kind of fear is that society is being held together with way less thread than we think.
It's the idea of a thread,
LA,
dude.
yeah,
it's the idea of a thread.
If they're it's just the concept of a thread. It's like
the bucket, like when they took the top over. It's like the monkeys that were or it was the flies, and they couldn't get out of the bucket thing, and then they took the top off, and they kept bouncing off nothing. And they couldn't get out. You're like, they just happened in 2020. They just said people are dying and they're not dying, and you're like, they just did it to us.
Yeah. You take out the electricity for what, 2 days in LA? Like I look around, I do this weird thing where if I'm on the freeway in rush hour or driving around and I see people, like I like do this thing where I like look at people and I like try to figure them out, and I try to think like if the electricity was out for 1 day, 2 days, 3 days, like I try to like come up with like a day, right? Like how many days would this person last before they start doing crazy shit? And most people that you see in LA, it's like 2 days. They're not like, so it's something as simple as the electricity going out for 2 days. Like that alone is enough to bring a city to its knees. You know what I mean? Like we had the riots here during what was that, 2021? It's pretty crazy. Like we just had them what was that, like a month or two ago with the other, like I have radios, right? Scanners. And I was listening to the tactical command channels for the LAPD. They were overwhelmed with like, I don't know, what was it, like 3,000 protesters downtown? 3,000 people in downtown, and the LAPD was completely you could hear the panic in their voice from someone who listens to radio traffic all the time. You could hear that they were at their limit. That was it. It was 3,000 people kind of rioting in downtown. That was it, So it's precariously perched, and then you start including like political violence and maybe racial stuff gets bad, and like it doesn't take very much for all this to kind of crumble. And in that point, you want food, water, and 223 and 9mm. That's what you want. Like 9mm currency will be extraordinarily valuable. It's probably going to look very cheap in today's dollar terms. Or can of food, like stuff like that, or water, like those are the sorts of things that like it's never bad. We talk about like gold and S&P and NASDAQ and this, but like I think it's never bad to like have useful things.
I agree.
Whether it's skills, right? Whether if you pay some money to take a course in some useful skill, or you're accumulating canned food every time you go to the grocery store, like things like that can be as beneficial. That could save your life way more than saving $10 to put it in a Bitcoin every week or every day, But then again, I'm just, I'm inclined. That's just how my brain works.
I think you have to. I've seen a lot of conversation where they're like, because the state of the world, everyone's talking about the state of the world, so everyone's complaining. It's like this negative spin on everything. So people are like, there's too much complaining, and I'm like, no, it's not. It's not about complaining. It's just like, if you don't have like, how do I put this? Like
therapy.
Sometimes not even that. It's like sometimes people will, for example, sometimes people will get mad because I bring Joe Carlosari out in the spaces. They don't like his opinion. They don't share his origin of opinion, whatever the reason is. They don't believe he represents the ideal, whatever. Doesn't matter why they don't like them. Doesn't matter if they're a speaker or a listener. But I'll bring them on and here's takes and stuff like that. And because I think it's worth, because if he puts out the take, and it doesn't matter if we agree or disagree, but then we spin into a conversation that wasn't going to happen because of that take, I don't mind that. And I think that's worth having. And I almost count that as like a skill set added. Like I count conversation and knowledge in this sense. I'll count a YouTube video sometimes. Like that land video is like an investment into my brain because it's in the future.
Absolutely.
I'd like to come to that kind of conclusion. Then, hey, let me buy a Lambo.
Yeah.
It's like, wait, you can buy a Lambo, which means you could probably buy this land over here, which is what actually matters.
Yeah.
Do we want
you
to
could buy some
this
seeds? You could learn how to grow I don't know, whatever, wherever you're living, right, dude? Learn how to grow the stuff that grows there. Like if it, like one day, hopefully the YouTube is like generating enough money that I'm like actually able to afford to buy a house and stuff. That's the path.
We're gonna talk to you, Robert. We now you have your YouTube, and I was like, look, now we're all cooking world on YouTube. Like there's definitely opportunity now. So we'll talk soon on a call with the wolf team, there's opportunity here for sure.
It's blown my mind with 23,000, 24,000, however many I have. It's blown my mind that it's like, wait, I'm making this much already.
Not only that, there's a way to do monetization. Like, I don't want to use the right correctly, but like there's a way to do it well where you feel good, they feel good, the client feels good, and they got the results, and the person who, like the customer or the user or viewer, doesn't lose. Like there is a way where you can have that, but it requires like, I don't really know the answer is, but with Wolf the last year and a half, we really, really dialed in and focused, and we're like, we can't just accept everyone. We have to work, we have to try stuff. And there might be a couple companies that we are a little bit iffy, not sure about, but like we cannot just start saying yes to everyone.
Yeah.
And then we switched over a bit of our model to more, performance-based. And so it's very merit-based. It's like we either did it or we didn't. And if we did, you probably want to resign because you got results. If you don't, then it's an easy walk away because we obviously didn't get the results. And we've gone from like a whole lot of stuff, all sorts of clients, to basically no churn. And it's been a while, but the crazy thing for me, the best part has been that like, oh, you can do social media, you can monetize social media, and you can do it without screwing over your own audience.
Yeah.
And I just don't think people believe that they can do it anymore because most of the things have just become late stage capitalism, cash grabs.
Yeah.
And that's just what we're seeing a lot of the time. But I just haven't blown away this past year. Like if you put in good quality stuff, like you always have, which is why we've always had you come onto the spaces. And like, it's been crazy watching you go from literally, like we were just talking about Bitcoin,
I think I had like 2,000 followers on
you were included on multiple lists I've seen of like top 10, top 20 people speaking about Bitcoin, about macro, about economics. Like you're in all these lists now of like goated lists. And I'm like, let's go. Dude. Like, this is so crazy.
I literally, like when we started doing spaces, whenever that was 23, 24, I literally had like 2,000 followers on X. And now I just looked at it. I have 52,000.
Wow.
YouTube, X, and Instagram. Even my Instagram is blowing up. I
don't
even
know
really. Yeah, I have an
Instagram.
It's up to 500 followers. I'm like,
wait, what is it?
Blowing up?
Is it
it's the same as my YouTube. It's
Infonomics, dude. No way. Are you posting shorts?
I don't know. I don't know why I think it was because I have to investigate. I'm not really on Instagram very much to like investigate why it's happening. But I think it might have been, I just did a podcast with this guy, Zach. I'm going to totally space Zach Loft. He covers housing. He's cool though. He's like super cool dude. He's very like-minded as all of our crowd. He's a very cool guy. And so I just did a podcast with him. I think it was like a week ago. So I think what happened is he released it and getting a flood. But
That's awesome.
It's like, it's a trip. The thought never occurred to me that I would even have 5,000, let alone 10,000 or 20 or 30 or 40 or 50. And like, you start kind of projecting out, okay, well, like this is only 5 months in. It's like, whoa, okay. And I would say the secret, like everyone wants to do it, except I never thought I wanted to until I started doing it. But everyone most young people want to do it. I would say the key is like, you have to understand whatever the subject matter is, you have to devote a ton of time and energy to it, really understand it well. And that can take a lot of effort. That could be 20,000, 25,000 hours of work to really grasp it completely. But then once you have that one subject, just like when it comes to YouTube, it's just every day, just spend like
Hammer
2 or
it.
3 hours every single day. Like that sort of consistency. And like I try just every single day, I'm gonna, and it takes, I don't know, 2, 3, 4, sometimes 5 hours to put together a video. And then you gotta record it, right? But like, then you get, 24,000 subscribers in 5 months. And it's like, okay, if that's all it takes is 3, 4 hours a day, then and this is the results I'm getting. Yeah, absolutely. I can do that. I'll continue to do that.
Yeah.
It's just the consistency. And I think the willingness to like, you gotta like really know whatever
You
you're
have something to
trying to
say.
do.
You have to have something to say, or you take my model, which is Wolf, which is you bring people on who have something to say
Yeah.
that you're trying to learn about, and then they bring their expertise on, and
Which
hopefully
is that's a skill in it. You have to find the right people, right? You
Yeah.
have to make sure they're not going to like cause drama or say something dumb or
Yeah.
say something that upsets the advert. Like that's a skill, right? Like being just a host is a skill that I want to be able to do, like, so yeah, I mean, look, with all the like negative things that charts and data that we looked at, like there are positives out in the world for young people, right? Like you can do all sorts of stuff. You could start a YouTube channel, you could start a podcast and kind of like a media company. Like there's all sorts of stuff you could do. You could trade, right? Like a lot of young people, like a lot of them are unprofitable,
Sure.
right? Like it takes a lot of work to become profitable. But like, look, if you're willing to put in the effort and learn how to trade, you can trade. You can trade options or futures or crypto.
If people
or
knew that you
whatever.
could DM any company and get a response, like our CMO at Wolf a year ago was broke. He had like $5 in his bank account. It was making like $100 a month, and sent a DM, helped with copy for a few months, took care of a project, killed it, and then a few months later, CMO, and he's killing it now. And it's like that kind of thing is so possible. It's ridiculous. You're a phone call away or a DM away sometimes. You have no idea, because you might work for 2 months and then literally their COO quits or something. And they're like, crap, we kind of need a COO. What do you think? Like, you're good. I'd rather hire you. And it's
even
just like,
spaces, right? Like how it started for me, it was a random Sunday. I won't forget this. It was a random Sunday and I went in one of Fred's Bitcoin spaces. I was just listening. I had never really been in a space before and I was just listening, and they start talking about macro. And I was like, oh, like I know this. Maybe I say something. And so I requested go up. I said something and like got like, I don't know, 200 followers that day,
no
right?
kidding.
And I was like, okay, so I'll do the next space that he does. And like, just don't, everyone doubts themselves. Everyone has that self-doubt and that like apprehension, all those like demons, right? And the world is very cruel and it's very punishing, and the world is not pretty right now for most young, especially young men. So like, I get the kind of inclination to just like curl up in a ball, play video games all day and like say, F everything. Like I get that, but like, if you're willing to take risks, like that was literally all it took. And from there, I did a couple spaces, and the next thing I know is doing spaces with you. And the next thing after that, it was Mario. No, I can't say his last name. Mario N. Yeah, there you go. And then after that, it was so yeah, you just do the next thing in front of you. You just kind of take that next step. You're not, like I'm very self-conscious. I'm very anxious. I'm very like self-doubt, all that stuff. But like, I came to a point where I was just like, I don't even care. I don't care what people think. I don't care if people think I'm dumb. I don't care if people think this or that. Like, I literally don't care. I'm just going to do it. I have nothing else to lose. Cause like I tried the traditional thing. I climbed the corporate ladder. I killed myself for 16 years and I'd have to triple my income. I'd have to make $300,000 to buy the same house. I was like, that didn't work. So F it, I'm just gonna, like, who cares? What do I have to lose, and you kind of have to get to that point where you're just like, I'll do anything, I don't care like what people think.
I remember even on the spaces, I mean, obviously our spaces caliber speaker is high, so you can't just roll up on a Bitcoin space in Wolf. And if you're not high level, you probably can't survive, to be honest, because we just got some smart people on the panel. And I'm the host. I'm 27, so I'm just here for the first time, essentially. I've seen a couple markets from more of afar, So I'm asking questions that I have real desire to know the answers to. And so for the most part, I barely give any takes. It probably took about like 14 months or so, probably straight of the Bitcoin space every week before now I feel comfortable even giving a take or even putting out something and being like, so what do you think, Dark? Or what do you think, Robert, about this? Because prior I didn't even I couldn't even formulate the right questions for the first year because I didn't even know like enough context of what was going on. And it took 14 months and then a couple podcasts where I went on as the guest. And I'm saying things and I realize, oh my God, I sound like a genius right now because all I hear is people with, tons of wealth of knowledge speaking to me. So my like general brain flow is actually at a higher level. I didn't realize.
Then you don't realize it.
Yeah. But compared to them, of course, I'm nowhere near, but to the average person, I know a lot more.
It's that easy. Like, look, when I decided I was going to learn and understand global macro and how markets work and all this economics and monetary, when I decided I was going to understand, I would literally listen to just like 12, 13, 14, 15 hours of macro podcasts of academic, right? You can find like speeches at school, Harvard School of Economics, right? There's like dozens of these professors and guest speakers, and it's all free. You just listen to it. And it's like, it's like an hour and a half long, and it's like, but like it's there if you're willing to absorb it, and sooner or later you do that day after day after day. You get to a point where you wake up and you're like, how do I even know all this stuff? Like I've gotten to a point where sometimes it trips me out where I'm like, when did I exactly learn that? Like, how do I even know that?
Funny.
Like, you don't realize because you're just immersed in it. And you've spent, a lot of like time in it. So with work and with taking risk, I would say, and like being able to accept, that it's a tough world and like you might fail and like, I think that those two things, but then consistency, like once you know your thing, you found your thing, okay, then just be consistent with it, whether it's Twitter, YouTube, or whatever, and hosting a podcast, whatever it is. I think, like, the world's not all bad today. And like, look, I think it was in a Wolf space, the YouTube channel. I literally started that like no, it wasn't Wolf. It was, I think Gary was doing a space. I was in there with Dark, Gary, and some other boomer. And they were giving me a hard time. Yeah, they were there. I was doing the typical thing and they were doing their typical thing. And like, and I thought to myself, like, okay, well, if Twitter is not enough to like make a living, like that's certainly true. Ad revenue on Twitter is like BS. I was like, okay, well, why not start YouTube? It was literally that day that I was in the space with Dark and Gary, and I forget, there was some other boomer in there, and they were all kind of doing the typical boomer thing, giving me a hard time, and I was pissed off, and I was like, all upset or whatever. But then I ended
totally
the space. I was like, no, like, they kind of have a point. Like, it is 2025. I can just do things. And so I was like, I'm going to just start a YouTube. I was like, I don't know what to do. At first, I was doing like shorts. Just like, I literally just started. I didn't even know what I was doing. I was like, okay, they have a point, right? Like, it is 2025, the internet age, right? Like, whatever. I do know a lot about this particular little thing. I'm just going to do it. I'm just going to do stuff. And so I just did stuff and it worked out, So I would encourage I would encourage young people, like, you can just do things, and like, sometimes it might not work out, but sometimes it can work out pretty well,
Yeah.
And I'm still very early in that pretty well.
I mean, one thing I'll say that's coming, that will happen is you've seen pretty extraordinary. I remember, so when I had my YouTube channel, I grew to 7,000 subscribers in about like 4 months or something. And I was like, oh my God, this is it. Like, finally, I'm about to be a YouTuber. Let's go. And I was so hyped because at that point I didn't know what I was doing, and it was NFTs. So like that's why it was such a run up. There was just a multiple month period where it was just a ton, and then obviously everything fell apart, and then it was a slow grind from there kind of thing. But I remember because I was like, oh, it's going well. Like, as long as I'm consistent, it should be smooth up. But it's just like the market, right? There's like this, and then there's this, and then it's up. So it's like that's the part I'm excited for you to have, because like that's like the YouTuber journy. That is, it's a fun time. It's brutal, but it's a fun time. But I'll say this, like, one thing I picked up, I'm 27, so I'm for people who are watching, they may not take this kind of advice, but I took this test when I was 25. It would have been 2 years ago, 24, 25. And it changed my life 2 years later. I didn't realize it, that it had, I don't know how exactly it worked on me, but it's a famous test. It's known for this exact thing, which is to change your life. It's called the self-authoring test. It's by Jordan Peterson. Half the
I've
people
heard
hate
of
the
this.
guy.
Yeah.
Half the people hate the guy.
Yeah.
I don't care. At the point I found him, I liked him. And he kept talking about this course thing that he put together. And I was like, dude, it's like $10. So I was like, whatever, I'm just going to buy the thing. I was not happy with where I was at. I had a relatively clear-ish direction on things I wanted, but I didn't have a path to get there. And I just had a general ominous vision of somewhere that direction. But for some reason, I really had come to a halt in terms of momentum. I couldn't get anything going. And I was kind of like, I'm so desperate. I'll do whatever. I'll literally write all these essays if that's what it takes, which is what the test is. It's basically a bunch of short answer responses, and it gets you thinking, and it really gets you thinking. And so I took that test over the course of about 3 months. I would work on it. Every couple of days I'd go on for a couple hours or for an hour or for 10 minutes at a time, answer a question or two. 2 years later, the things I wrote down were like goals I wanted, things I wanted to become better at. One of them was like, get a car, save up to 6 figures, like these kind of things. I was so far away from them. It was absurd to even think about it. I was 20 grand in debt. I wasn't even kind of close to these goals. And in 2 years, I won't go into specifics of the goals I was able to accomplish and things like that, but I mean, 70% hit rates in 2 years, probably success rate on some of those goals, an entirely different lifestyle. I don't know what happened because I don't remember changing anything after that.
Yeah.
But it was like a real intentional shift. And I don't know if it's a spiritual component or if it's God or the universe that requires your like signing on to say, I'm ready. But when you make a spiritual decision internally to say, I'm changing something, reality shifts around you. It morphs.
That's what happened to me.
Yeah.
I look, all no hate on the boomers. The boomer, especially those boomers, dark Gary and some other one. No hate on the boomers. They got me to think about what could I do. It's 2025, and then literally it was like a day or two later I just started the YouTube, and like 4 months later, 5 months later, like things feel totally different than how hopeless and how much like and I just keep laser focused on like I wake up every day. I wake up very early. I'm on the West Coast. I wake up at 3. And so from 3 to 8 a.m., I'm working on a video, a topic, find a topic, prepare the slides, whatever. And like, I just, every day is a new day. Every day is a new video, and I just like keep doing, and like, you kind of wake up and you're like, oh, whoa. God, what? Like, and you're looking at like the revenue and you're like looking at projected revenue and you're like, oh God, like what? Everything just changed in like 4 months. I feel so much different today than I did in that space when they were giving me a hard time, and it's like, it's kind of cool. Like I, even just looking back on it, just like remembering it, talking about it, thinking about it, like, going back to that, it was only like 5 months ago that I was like in that space, like hopeless, despair, just like, what do I even do? The world is so like just everything, and like then just for not even a year later, right, with consistent effort, and so it's not all bad. We looked at a lot of upsetting data, a lot of depressing things, but like it's not all bad.
There was shoot, I just had a full brain fart. What did you just say like 10 seconds ago?
It's not all bad.
Oh, it was right before that though. It was not all bad, but it was right before that. It was the story you're telling about. Oh, it's Dark Side. The one thing, and this is a very particular thing I do. So I don't know if people notice this, but I have never taken advice from people my age. No, that's not true. I do take advice from people my age and people who are younger, but I don't take specific advice from people who are my age. There's specific advice that I will only go to older people for. Like for certain things like that requires experience. Like you just have to have been in the market. Like those kind of things I won't ask someone, or certain things that require you having to have gone through a 10-year period and you need to be in your 30s during that period. Then I have to talk to someone in their 40s. The one thing that's beneficial that I have as like a backwards benefit for the boomer folks, which I don't know if they think about or aware of, but it's something I think about a little bit, is that I'll bring on a decent split of young guys, young folks, middle-aged folks, and some older folks. Because there really is something to learn. And so some of the older folks you were saying, like, they're kind of like, hey, we already made it. We're winning, but here's some great advice for you guys that can pass on to you folks. But then you come in with a different angle. You're like, okay, that's awesome. Here's another thing that you could try out. And they're just at a different phase of life. And you propose like a different strategy and idea. And you have this nice blend,
Yeah, what's cool is like they're comfortable, right? So they are not stressed trying to look at the world and figure it out. They're comfortable, so they can see the world as it really is all around them. They can see the opportunity because they're not stressing. They're not like, oh my God, I'm
Yeah,
making
right.
100K
Right.
and I'm like living paycheck to paycheck and like, what am I gonna do? Like, I'm so stressed. They're like, they're comfortable, right?
Yeah.
And they're looking at the world and they're like, no, it's the age of AI. You could do this. It's the age of YouTube. You could start a media, like that. That's I
Like
think
clear-headed. They can
yeah,
see.
yeah.
Yeah, it's fascinating. You're right, because we're like almost on the ground floor. They're able to see kind of like from a higher point of view,
Yeah,
kind of
because
thing.
they
But they
live the
miss stuff.
life.
If you're not on the floor, if you're not on the ground, then you miss stuff on the ground too.
Yeah, for
You know?
sure. It goes the
So,
other way as well. Yeah,
mhm.
yeah.
That's cool, dude. And Robert, listen, I just realized, I didn't even realize, but we've literally I had you on for an hour and I just realized, oh my God, I've been going for 2 hours. So I
Yeah,
apologize
no
if you
worries.
had somewhere to be, but
No,
I'm
I
so
don't.
glad we
I
did
don't.
get into it. Was going to say, so we've been rolling for a little bit. We'll have to do more of these because this is awesome. And I definitely think the charts, the streams is the move. Like spaces are amazing. But in the last couple of months at Wolf, we were kind of like, spaces audio is great and it's fantastic. But there's also another world of video streams and YouTube
Yeah.
that's also equally as cool, potentially even better opportunity. So we really are going to make an effort in that direction as well as X. But for people who are watching, I bet most people who are watching probably are already aware of you, but maybe they're not aware of the YouTube channel yet. So they've heard about it. Obviously, we've talked about it, but talk a little bit about what you cover on the YouTube channel. And I have everything pinned in the description on YouTube and on X. If you just go to his handle right above our faces, you can click on his handle and you can find his link tree there with all the links. But what is it that you cover on the YouTube channel? And then what is some of the stuff you cover on the X who are like, okay, cool, I want to follow along and see what kind of things you're going to be doing in your journey?
Yeah, just macro news, market happenings. Like I try to explain kind of pretty complicated things. And like when I was trying to learn, no one really did that in simple English. It was a bunch of macro nerds talking to other macro nerds. So I try to kind of like dissect stuff like what we did today, but explain it kind of in simple English the best I can, look at like, here's a look at, what the Italian market, the Italian economy looked like during their debt crisis or, that kind of stuff. Here's why UK is in a debt crisis. That sort of stuff. So yeah, just like a lot of the things you might hear on like CNBC or see a headline about the bond market, this try to like actually explain it in a way that like normal people that aren't nerds can understand. That's the goal at least. And yeah, the Twitter is kind of like, just kind of like random thoughts sometimes, like just S posting sometimes, but
you do some in-depth analysis as well.
I
Sometimes.
try, yeah, sometimes on X. Yeah. Most of my time I like focus on the YouTube, but
Gotcha. Very cool, dude. Well, listen, I'm very much looking forward to it. I was so stoked when I saw that. I'm also glad that we were able to kind of let people know in the spaces world too. They're like, hey, there's another platform over here if you guys want to see video stuff and get a bit deeper into it. There's also these things that are offered from you. So listen, I'll say it for anyone who's watching, I highly recommend you guys check out the channel, give them a follow, check out the YouTube channel, and give them a subscription. I mean, dude, this guy just dropped alpha for like 2 hours straight and does it every single day on his YouTube as well. So be sure to follow there. And dude, I appreciate you coming on. We have spaces and streams every single day here at Wolf, and you can find him on a lot of the spaces that we talk about, kind of these things exactly too at the same time. So there's a whole lot more. So Robert, thank you so much for coming on.
Yeah, of course, anytime.
Absolutely, guys. If you're watching back at home, please do retweet the stream. Retweet the stream, give him a follow, and we'll see you guys all in the next one. The next space is going to be tomorrow at 11 a.m. Eastern about the market with the traders. So catch you guys there for that one.